Good afternoon. Good afternoon. Perfect. Are we having the presentation? So, how's Europe becoming the biggest market for crypto assets globally in 2025? I have to admit the answer is a pretty boring one. It's through regulation, actually. It's not just only by regulation, but I will go further and deeper into this in a second. But we really have to underline that if we have a new technology and a new market that gets more and more traction and adoption, regulation actually is something what can really help in facilitating this adoption, because it means certainties for all market participants. It means certainty for consumers as well as for providers of crypto asset services. And I want to go a bit more into detail why Europe actually is the market who is going to be kind of front-running when it comes to providing regulated crypto services to consumers and citizens among the entire European Union. I don't know if you have heard about MiCA. Maybe raise your hands if MiCA is familiar with you. 1, 2, okay. We have a experienced audience tonight. That's very good. MiCA is actually, we see a lot of regulation in Europe, right? I mean, I do not want to facilitate or kind of underline that regulation always is the right way to go. Europe kind of is front-running in that field, and sometimes possibly also kind of not helping the real economy to really, grow and get into some long-term adaptation of new technologies. But I would say when it comes to crypto and to Web3, we really have a different player field among Europe. Because what we see with the markets and crypto assets regulation actually is the biggest single regulated market for crypto worldwide. And this is quite exciting, I would say, if you compare it to other huge jurisdictions around the globe, for example, the US or China. We see that there's still a lot of uncertainty in the market. What kind of crypto services are you allowed to provide? What is the regulatory foundation? What kind of operating models are safe and sound when it comes to really deal with the regulators? There's a lot of uncertainty in those jurisdictions. If we look into Europe, we actually, by December 2024, so in this year, we will have one regulatory framework for the entire crypto space in Europe. And this regulatory framework will turn effective in all EU member states, in all 27 EU member states, by the 30th of December. And it means if you want to provide crypto services like trading services, if you want to run an exchange, if you want to provide brokerage services in crypto assets to your clients, all of that will be regulated. On the one hand side means you kind of have to adapt to that regulation. On the other hand side, it means that you have certainty in your operating model. And this certainty also means that certainty is there for investors, also investors into your company, possibly, if you are in the crypto space. And this certainty definitely will help, from our point of view at KPMG, to also allocate new funds into the crypto space, specifically focusing on Europe. As I said, and I think we really have to underline this once again. If we talk about the European Union, we talk about 448 million citizens. Among the entire European Union, we talk about the GDP of almost 17 trillion US dollars. That is kind of realized here on an annual basis. And this entire market will be addressable for regulated crypto services through MiCA by December this year. So this is kind of exciting. If we ask ourselves, what do we mean by crypto asset services and what will be in the scope of MiCA actually? We have three big buckets, I would say. So when it comes to what type of assets will be regulated, it's everything about native crypto. So everything that we know today, Bitcoin, ETH, Sol, all other types of native crypto assets will be within the scope of MiCA. So if you want to provide services around those assets, let it be safekeeping, trading, or others, you will be in the scope of MiCA. What else will be in the scope? It will be stablecoins, actually. USDC, USDT, all types of euro-denominated stablecoins that are here to be launched soon or already have been launched will be within the scope of MiCA. So we will also see those assets being regulated from December this year on. And last but not least, it will be all service providers providing services around those assets. I already mentioned some of those. In total, MiCA defines 10 services that will be in the scope that range from portfolio management to providing advisory services in crypto, let it be trading or the custody of crypto assets. So you can really say this is a comprehensive regulatory framework that covers the entire crypto market. And as I said, provides a lot of certainty and predictability into the crypto ecosystem when it comes to should I invest into Europe, should I build up a business model here in Europe. You can really kind of rely on that European regulatory framework that provides a lot of certainty. And we also have to keep in mind that MiCA will turn 27 local markets into one big European single market, right? So you could also apply for some crypto licenses, maybe in Spain, Italy, Germany, or other jurisdictions in Europe, but you always have been limited more or less to your local market. Under MiCA, you just need one license and one regulated entity within one country of the European Union, and this entity will allow you to address the entire European Union and the entire single market in the EU. So that's also compared to what you have to invest to kind of run and maintain your regulated business compared to what is your addressable market, really brings, it changes the, let's say, the circumstances for crypto providers in the European Union, and we would say, and always argue, makes them more favorable. If we look into what kind of services you should really focus on, where will be the biggest market potentials from crypto services under MiCA in the short term, we at KPMG believe it will be more or less in retail-facing services. So really setting up crypto business models that address retail clients in the European Union. And how do we come to this conclusion? And I'm just having some figures now from the German market, but those hold true. We have the numbers for the entire European Union, and they are very comparable to all countries in the EU. If you look into the German population, and that's representative numbers of more than 30,000 people in the survey, 13% actually of all German citizens in the age from 18 to 64 are already invested into crypto assets. If you would ask yourself, what is this number telling me? I mean, is 13% a lot? If I look into my friendship and my community, I would say it's definitely more than 13%. But let's compare, right? And if we compare, only 20% are invested into stocks and ETFs. And if you take those two numbers in comparison to each other, if you kind of realize how big the traditional investment and asset management industry is, addressing 20% of German citizens, and that holds true, those numbers hold true. It's different in the let it be 11 or 21% for other jurisdictions, but you can make this hypothesis for the entire European Union. You see that the crypto market is more than, in terms of adoption in the target group, we are not so far away. It's just 7% away from the traditional investment industry and from stocks and funds, And if we take that number and if we now translate it into, you can build up a European business model that addresses this market demand in the retail sector, I think we all believe and we understand that there's a big opportunity actually on the table for crypto players in the European Union. There's maybe also important to mention, there is some sort of fast track also for banks and already existing regulated entities in the European Union. So if you are a regulated bank, if you are a regulated investment firm, MiCA provides some sort of a fast track to get your business regulated and also provide crypto services to your clients. You can be positive or negative on this, but what is one big hypothesis that we already see? We already see proof points in the markets and in our consulting business today is that we will see some widespread adoption of crypto services by traditional banks and investment firms, actually. There has been a public announcement, for example, by the German cooperative banking group, so the Volksbanken and Raiffeisenbanken. You have to keep in mind that's 18 million retail clients in Germany alone. It's the second biggest banking group in Germany, announcing they will provide a crypto investment service to their retail clients by the end of 2024, beginning of 2025. So we are not just only talking about specialized crypto providers serving retail clients, but we are talking about large-scale traditional retail organizations really building up crypto services under MiCA, addressing a huge number of existing clients within their client base. I mean, and if we now see that those huge players move into building up crypto services, I believe it's a strong hypothesis, once again, that we will not just only see people who are already part of the crypto space moving into investing into crypto, but that there will be more adoption from, let's say, more traditional investors and banking clients who just get the opportunity to move into their online banking app and beside investing into traditional blue chip stocks, also having the opportunity investing into Bitcoin and other crypto assets. However, we would say the long-term potential is probably even bigger. I mean, we will see a strong adoption in crypto investments and crypto services starting by the beginning of next year within the European Union, mostly driven by regulation. But we should not underestimate the long-term potential of the underlying technology, right? We've learned a lot about new rails for smart money, smart financial instruments that can be issued and processed on programmable market infrastructures, right? So the whole potential about tokenization, we should really not underestimate. Larry Fink, the CEO of BlackRock, at the beginning of 2024 said, hey, Bitcoin ETFs are going to be step one of the revolutionization of financial markets, but step two, and the significantly bigger one, will be the tokenization of all types of financial instruments. I mean, adopting new financial market infrastructure always takes time. The switching costs are high. Our existing market infrastructure somehow are functioning. They are working. But there will be some moment where we switch to new market infrastructures, and it will be programmable market infrastructures, most likely running on blockchain technology. And if we also have that long-term potential in mind, I think all banks and all traditional organizations in the financial services space make a very smart move if they now move into providing crypto services. Because if you provide crypto services, you kind of build up your capabilities and your skills to also be part of a digital capital market in programmable smart financial instruments that we will see kind of getting more and more adoption probably within the next 5 to 10 years. So long-term potential is probably even bigger from tokenization. We did some estimators, KPMG, and I can tell you this is really like we took a conservative approach and model that we took here to estimate those numbers. But we will see at least 330 billion of tokenized assets, traditional mutual funds, and other types of, let's say, regulated financial instruments that will be kind of issued and on-ramped into digital market infrastructures through tokenization by the end of 2030. let me come to my last point. We talked about crypto services. We talked about the long-term potential of new market infrastructures, programmable financial instruments, and tokenization. I think one last piece that we have to add to this puzzle of a vital crypto space and digital asset market economy within Europe is really the topic about, let's say, the new business models that you can unlock if you provide wallet services and if you provide a trusted gateway into Web3. And I mean, if we take today's role of banks and other, let's say, trusted parties that we trust and putting our savings there, putting what really has some value to us. I mean, that's the core value proposition of a bank, right? You have some money, you want to deposit it somewhere, you want to have it at a safe space. And we will see this traditional value proposition, this core value proposition of banks being translated into the Web3 space. I mean, we can discuss non-custodian wallets for long, but there will be a huge cohort of citizens who want to have some sort of trusted wallet service that also has some call center if you know, not everybody is into managing your own keys, right? And we see a strong hypothesis in the, actually that banks will provide this function of being a trusted gateway into the Web3 space, if they are brave enough, actually. I mean, this is a really big business opportunity from our point of view. Banks for too long have worked on, we need to develop some, beyond banking services, And if you take the simple user experience of connect your wallet, you have payments, you have custody of your digital assets, you have your digital identity, everything at one space. And I mean, the APIs are there. Everything is kind of the technical infrastructure more or less is developed. And we, I'm really waiting actually for the first large banking organization in Europe actually making that bold step, not just only providing custody services for crypto assets, but moving into the space of providing a Web3 connect your wallet feature to their clients, saying, hey, I'm your partner in the digital space. You can trust and rely on me. All right, guys, let me finish. So we believe with MiCA, with the potential of tokenization, and actually with Web3 adoption and the gateway function that you need in Web3 adoption and the trusted gateway that banks and other players can provide, the outlook for the crypto space in Europe is actually a very positive one. Yeah, and we're happy to see the adoption in the next years coming. And long story short, I believe, yeah, this is really an opportunity for the space and for our ecosystem, and should really build some exciting new business model on those opportunities. Thank you very much.